Thanks for your company. I'm Jessica Amir for the Finance News Network, and with us today from Mainstream Group Holdings is CEO Martin Smith. Hi Martin, and welcome back.
Thanks Jessica.
Thanks for coming. So first up, just give us a quick introduction to the business.
So Mainstream is a full service fund administrator. We operate in 8 countries. We were formed in 2006 in Australia. We've been listed on the ASX since October 2015. As a full service fund administrator, we provide the back office services for a range of fund managers. We have approximately 300 odd clients.
Now to your first half 2019 results, can you take us through some highlights?
We've grown the business since we listed from circa $14 million in 2015 to north of $50 million. And we've seen that growth continue in the first half. We had revenue growth of 32%. We also had EBITDA growth of 20%.
Now, can you tell us about what you do in the fund admin side of things, starting with full service?
So the full service fund administration includes investor services, what we call investment administration, fund accounting, and for some clients, performance and compliance.
And can you tell us about your private equity administration?
We've opened a business in the US providing private equity administration. It's quite unique versus providing equity administration. It's typically for larger assets that are privately held. It can be private debt, it can be property, or it could be venture capital. The growth in the US in what they call private equity markets is phenomenal. There are circa 52,500 private equity funds in the US that are registered with the SEC. And to be registered with the SEC, you need to have assets more than 150 million. Last year in Australia, as a comparison, there were 32 new private equity funds. In the US, there were 3,500. So we've been investing in the US business. We hired a team in January 2018. Rather than do an acquisition, we did an organic growth investment. And we've got a team based both on the East and West Coast, and they're growing that business organically. And
another one of your business key areas is custodial services.
So we have about $150 billion of assets, and we've had a full service custody license since 2012. But to offer that service, you must have 10 million of regulatory capital on your balance sheet all the time. So we, in September 2018, we raised $9.5 million to allow us to meet our regulatory capital needs. And we've been offering that service to a range of our clients. And that business has grown in those 4 months to circa 5 billion of assets that are now in custody. We make money off what we call safekeeping of those assets, but we also make money by being able to aggregate the cash of multiple clients. And we have at the moment about 350 million in our cash custody. And the banks offer us higher interest rates than any one manager could get on their own, and we make a margin on that.
Zooming out to the business level, more broadly, what can you tell us about your finances?
So the thing in the half year that we're excited about was while the market's corrected circa 10%, our assets under administration actually grew 6%. The 3 reasons for that. The first reason was we onboarded a number of new clients. Our hedge fund business generally is defensive against a falling market, and our custodial business took on and manages converted a number of their investments into cash, which allowed for protection against market correction.
And over the past 6 months, how has your funds under management grown, and can you touch on your share price as well?
Our funds under administration reached 147 billion as at 31 December. We had net flows or increase of $8.3 billion, which equates to 6%. And the general market had fallen 10% in that half year, so we're really pleased with the net result. It was actually a gross inflow of 14 plus billion, and market correction took 6 billion. On our share price, we did a capital raise in September last year at 70 cents. There's probably a little bit of an overreaction to the markets and our exposure to the markets. We're currently trading at circa 63 to 64 cents. We have 2 analyst research reports out there recommending a buy. north of 80 cents.
Just a more general question now, Martin. What are the industry tailwinds and what do you see as your major competitive advantage?
Probably the first one is that more people are outsourcing these services because of operational compliance and cost of technology. That'd be the first tailwind. You're also seeing compulsory superannuation compounding the amount of assets and the inflows into those assets, and we're definitely a beneficiary of that. And the markets that we only entered in the last couple of years, we now have a robust platform to offer to clients, and our brand is better known in those markets, so we're seeing a lot more inquiries.
Wonderful, and we look forward to watching you grow. Martin Smith, thank you so much.
Thank you.